Hello, today I am back again. My name is Paris, working hard to be your favorite Paris. And today I am talking about how much debt would your family be left with if you passed away today. If you are familiar with my page, or if you're not, let me introduce you to the Paris acronym, which happens to be my name. P stands for Protect Your Income. I talked about Protect Your Income on a live just yesterday. Not sure when you'll see this, but it is all over my page about how you set up yourself to protect your income. Today is all about, let me put it, add up debt. So we'll get into a lot of details about that. If you moved on to the letter R, that is remember final expense, which I'll be talking about tomorrow. I's include dreams and legacy, which is one of my favorite topics. And then after you add all those up, you take S and you subtract your savings. So that's a quick overview of the Paris acronym. Definitely check out the live that I did yesterday. Went over a lot of different scenarios on and ideas about protecting your income, not only after you pass away, but also while you're still living. Anytime I'm talking to you, we are thinking about you living until the age of 100. So let me bring this up. How much debt would your loved ones inherit if you died today? So I'm going to go over, I put together top 10, a list of debt that most people leave when they pass away. And then we're going to go through which of those debts are actually paid after death and which ones you can kind of go with all of the rumors that you hear. They can't get it from me. Because a lot of times we say that, but that is not always the case. Okay. So let me start. So, one big one, let's start with breaking the myths of creditors that will actually come after. It feels like they're coming after you when you pass away, but really they're coming after that estate. They're coming for the coins. This is another reminder, and I'm jumping right into debt. So, if you have questions, feel free to drop them in if you're a little lost. But um, when we are talking about debt and things that creditors will come after afterwards, another thing that came to my mind is probate. And a lot of times people think that probate is only for rich people. That is not true. No one is exempt from probate, aka going to court to prove who gets paid, who gets money if things aren't planned out properly. Right? So are we following? Yes, we are. I know we are. Okay, so let me see. We'll talk a little bit more after I go through these about the emotional tool, but just starting with the financial things, at the top is medical expenses. Do not believe what you heard. Like a lot of times medical debt will go away. However, if when medical debt is when the case is won and they actually are able to come after the state, one big thing that goes into play is if the individual was on Medicaid or getting government assistance. If you were on Medicaid or getting government assistance, they are going to come after the estate and try and collect on those claims. If you were really sick, and you had some expensive treatment, say at a private center or something like that recently, sometimes I've even seen treatments where people have had to get a co-signer to get those treatments done. If you pass away during that and it's a huge bill, they're going to try and see if there's something that can be collected. Now, government assistance, private care, that's fine. If if you were on like Medicare, most of the time those medical bills, if you had like your co-pays due, they're going to write that off because they got a majority of their payment from Medicare. This is when it's important to know the difference between Medicare and Medicaid. Got it? Okay, so medical bills, that's cool. If hospitals, they don't really file claims, but if they file a claim, again, it's probably some really expensive treatment, and they're trying to see if there's anything from the estate that they can collect. Um, Funeral expenses. Now, a lot of funeral homes have got hip to it. They won't even have your service sometimes if they haven't been paid. Some funeral homes still today will just take like the letter claiming, if you say that you have a policy, they'll take a letter. I do not recommend you letting the funeral homes know how much money you actually have. But let's say something happens where the funeral home went ahead and took care of your family member without their full payment, and then you try to like ghost them and not pay. They're coming after that estate. They're sure going to try. Those two medical bills, if they come after you and they have a legitimate claim and you have an estate or a small policy, most of the time they win. Funeral homes, think about it. If they've taken care of your family and you have a estate that they can come after, they're going to win in that court case. Even if you are, say, me, I pass away and it's just my daughter and I only had $5,000 and that was my funeral, they're going to come and take that from her. They're not going to care that it was just me. She's over here now. They're not going to care, daughter. But we're going to have that's already in place. So you'll be fine. Um, and funeral homes and things like that, they take priority in most states. Mortgage debt, they're definitely coming after a state and they have all your business. That's one, if you do the acronym, we talked about that. That's actually what we talk about in A, add up the debts. If you have a family home that you want to stay in the family, you're going to want to make sure that that can continue to be paid for when you're gone. If you already own it, there's things to think about: property taxes, upkeep, all of that good stuff. That's something that definitely. Mm-mm-mm. So if someone wants to keep the home, say you just bought a new home and it has a large bill and you don't have, this is the same for auto loans too. I had to look at my list and make sure I grouped those together. Auto loans and property loans, if you have like a co-signer or something like that, those loans have to be refinanced and put in those folks' name, or you have to have the funds to be able to pay it off. Either way, it has to be taken care of and it's not free. Okay. This is all money and business. Those two things, auto loans, mortgage loans, if they come after your estate, most of the time they're going to win. Unpaid taxes. You can't even run from those in death. Those are the ones that normally will try and come after your estate after you pass away. So those are the ones. If they're coming after you, you heard it here first. If you pass away and you have an estate or you have some money and you have any of those debts like medical bills, funeral burial expenses, mortgage debt, auto loans, unpaid taxes, they are going to win that court case and eat up a lot of your money. And sometimes it takes quite a bit of time. I had a client the other day, her husband passed away and they never finished the actual what part of the home she wasn't on. It took almost 90 days to get through all the court costs and everything. She had to get a lawyer, she had to go to court, pay a lot of fees. It ended up going in her favor, but that was a lot of money and time that she had to spend. And it was her home that she had been in with her husband for over 30 years, but that doesn't matter when you don't have TODs, title of deaths, and survivorship, and just don't have your paperwork in order. You have to go through the court process to make sure it's legit. Okay, now let's talk about a couple of things on the debt list that are kind of, you might have to pay, you might not have to pay. Credit card debt. Credit card debt, they're unsecured, so they're low at the totem pole as far as being able to come and collect after estates. Normally they get written off. Um, mm, 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 mm. Yeah, so they don't normally. It would probably, some big credit card, crazier things has happened, but most of the time, no. Personal loans are just like credit cards. They're unsecured and not guaranteed to be paid. So they plan for that accordingly. Legal judgments and liens. If there's a lien on a property like a home, they'll get paid once that property is sold. Um, they're really low on the priority list. So most of the time, those don't have to get paid. Now, What really doesn't get paid, or you don't have to worry about them coming after you after after death, is student loans. Those are when you finally can say forget it to those. Student loans, they don't really win if they come after you after death. And business debts, like personally guaranteed type debts, they only win if they like co-signed personally, like the guarantee with you. Otherwise, all the business assets, when those sold, those would be handled. And a way to kind of prevent probate and prevent your legacy money being eaten up in probate, you anything that you can list a beneficiary. If you buy a product, like most insurance products, you can add a beneficiary. That prevents you from going to probate. Remember, we talked about the pros and the cons of adding someone under 18 as a beneficiary. um TODs, title on deaths, there's always paperwork that you can do, bank accounts, making sure you add the beneficiaries there. I'm guilty before. There's been tons of things where I bought and they sometimes make the beneficiary optional and you skip right over it. Yeah, because if I'm gone, it's going to be optional to pay anybody. That just makes things harder. You think about it. Just think of anybody, or Google a court case right now. If you have a life insurance policy and you have $15,000, which I say to start with for final expense, if the funeral costs 10, you got 5 left. Hopefully you get out of court with less than 5,000. Then there's nothing left for your family to finish taking care of other things. So that is very important. So let me just give you an example. Let me share my screen. And I kind of made this example so you can see the acronym. All right. Okay, so here's the Paris example. I went through that like really, really fast. But again, I talked about it earlier, the last couple of lives. So you can see here, P, where we talked about the first letter, protect your income. So let's just say yesterday, again, we went into detail. You might make 50K, you might make more, you might make less, but we're planning on protecting your income for while you're living and after you pass away. The example I used yesterday, I did 10 years, but here you can just think 5 years, maybe it's you. Here's where we talk about debts. So this is the 150,000 a court accounting for the mortgage, then a car, credit cards, that's the total there. Final expense, we have it here. This is for kids' college if you have that. Subtract any savings. Again, remember, if you only have life insurance through your employer, that's the same as not having any, because that is essentially term insurance, which is great, but that's like an extra razzle dazzle. So that's like adding sprinkles, okay? Because it's only good for how long you're there. Now, you can see on this example, it comes down to the total of you needing $445,000. Now, a few different things may come into place with how we close this gap. Some of this might be whole life insurance, a majority. That's where we're going to start with. Then next, the term insurance, we will add some term insurance for some of these things. You think while you're working, let's add that could be part of the 250,000 could be in term. Now, each person is different depending on if you're married, have kids, how old you are. Will determine how we mix this up. There's cancer and stroke insurance. There's also IUL. So $445,000 luckily won't cost you $445,000. We'll work on a different strategy through different insurance products to make sure that that is perfect for you. Let me remove that. And then I want to bring this up because this is also something that if you're interested in, I can email this copy to you. So I have let's delete this. And we're really focused today on adding debts and obligations. So, part of the homework, oh, I haven't added this to the screen. Sorry. 1 second. So let me put the homework up. And then, okay, so I'm going to share this. And part of the homework, you can see right here. So this is a whole Excel sheet. Say you made, let's just do from the example. They said 5 years. Now sit down and take some time to really think about your debts. A lot of times I talk to some of my customers and in different seminars, and it's something as simple as the name of your bank. There's not just one bank. There's not just brick and mortar banks. I have a bank account that's only online, not my only one, but there's one of them. Making a list of all of the different things that you have. It's come up with there's been a delay in payout from an insurance plan that I saw because the individual didn't have the code to their parents' phone. Think of how many authentication codes you have to get through your phone and email. I have a book here. If you're local, it's called I'm Dead Now What? You can stop by and get this, but it's like think about the grass guy. Somebody's got to tell him to come cutting the grass. Post office boxes. Just think of everything that it takes to run your life today. You may think, oh, I don't have any debt, but you have it. It costs a lot to be you every day, from your home, electric, all of those things. So what I challenge you to do today, this week, start a tab on your phone and just think about adding up your debt. Another thing here today, we talked about real life debt that's in real time, but also think about the future. Remember, we're planning to be 100. So we're thinking about our debt while we're living and after we pass away. We don't want to leave any of these things as a burden if we pass away unexpectedly, but also think about for the future. Do you have children, godchildren, nieces, nephews, or anything like that? Would you like to put a couple of dollars on their future mortgage or their college or their future wedding or anything like that? You will add that all into here because think about it. You're planning to live. We're planning to live. Life insurance isn't just about planning to die. That's just the R. We're planning to live. So think about the debt and your obligations from now into the age of 100, and you will come up with the perfect number. So just because I'm working hard to be your favorite Paris, I want to go through P, protect your income. So make that sure. A, you're going to add up your debts. R, you're going to remember final expense. I, you're going to include your dreams and legacy. S, you're going to subtract your savings. I want you to save this video and tag someone who needs to hear this today. We all got some debt, or we have some debt that we want to have. So let's plan for it in the future. Of course, if you want help calculating your magic number, I went through this in 18 minutes. Normally doesn't go that fast. I'm talking so that you can use this fast so that you can use this as a reference, but feel free to reach out to me and we can do this for free. Thank you so much for listening. Remember, protecting your family starts with being informed. Thank you so much for dreaming with me. Peace out.